Welcome to Taking Stock. It's 12 o'clock. Sorry, I was just looking at the Bank of England rate decision. Badim is joining me. What is it with these SP Angel guys? They can never be on time. John, yes,
I am on time.
well, you're not. It's just going 12. But the decision's out, literally on hold. But let's have a look here. Who voted for a hike? 6 voted for unchanged. 2 for a hike. So we're saying that. So where's the other one gone? Cut. 1 voted for a cut. I say, Vadim.
There you go. There you go.
That's
it. It's over. We're never going to see rate hikes.
Yeah.
So
there we are. There's the things there. Obviously, 5.25%. That's where it's staying at. But they were predicting that no members would go for a cut. 1 has gone for a cut. 2 has gone for a hike, same as last time. 6 has gone for unchanged, but that's the change. That's more dovish, isn't it?
Yeah, absolutely.
1 person now saying cut.
That is a swing in the right direction, as far as I'm concerned.
Yeah. Anyway, welcome everyone. Sorry, I did want to go at 11:59, but the SP Angel guys, something wrong with their clocks in their office, I think.
I literally signed on at 11:59.
Okay. Welcome everyone. Hit that thumbs up button if you could. Subscribe to the channel. Download the Vox Market app. Any comments? Let's see what's happening to the bonds here. Let's have the markets. In fact, let me share the screen. This is the FTSE. Let's have a look at the bonds here. See what's happening to the thing here. Well, they're not changed a lot there. Up at the Smids, they were down yesterday, but they are up at Smids. We're not moving really. There's no movement. No movement there. Let's look at currency. Should we pound versus dollar? Or the pound versus dollar down a little smidge. Not a lot. Not a lot of movement going on.
Well, that's what you would expect it to go down a bit, but not much, which is good.
Yeah. You would. I just think the bonds are up a smidge there, but not a lot. It's hardly any movement. But
yeah.
It's good that I think one guy is obviously saying it's time to cut now, guys. Come on, let's get it done. So let's just quick look at the markets quickly. Just moving the shares. FTSE 200 is up nearly 0.5%. FTSE 250 down less than 31%. Any movement there? Not really. All share is 35. AIM all share again. Little bit of a smidge up. Biggest rise today. SHEL had news out. Their profits have gone down, but SHEL's profits going down. It's still huge. It's like 28 billion or something ridiculous for the quarter. But they're up almost 3%. GSK, Glencore, what are the falls today? Fresnillo, in fact, John talked about this yesterday. John Mayer saying that's a company that's been sold off massively, a big sort of silver producer. But Ocado, it's always there. Ocado, always messing around. Next,
Ocado, I don't know. It's taken a bit of a hit lately. Ocado's taking a hit. Deliveroo is actually coming back. Actually, Deliveroo had an interesting Delivery Hero, which is the German bigger company, has been selling its stake, which creates a bit of an opportunity actually. So they're selling in their stake, not because it's not, well, who knows really why, but Deliveroo is doing well, outperforming. Delivery Hero is underperforming, and they're having a bit of a cash crunch. So they're liquidating their assets. So it might be an opportunity to get, I'm a big supporter of Deliveroo. I think that it's, these dips, when they're for technical reasons, and this is a technical reason, you've got a seller that's an overhang that's placing stock in the market that needs to sell, not because your company is bad, but because they just need the cash. So
look at that level. Yeah, you can see this level here. Previously, pretty much a little bit of support here. Yeah, say 120, and you got the 200-day moving average. Sorry, and it's just dipped below that. So previously.
But it's for all the right reasons. I think the placing was done at 113. So basically, there was a vendor placing, right? So Delivery Hero is a German delivery company that had a 4% or a 5% stake in Deliveroo. Okay, Delivery Hero has been profit warning and going backwards, and they're liquidating their assets all over the place to try. They're getting out of countries. They're trying to sell. They sold to another business, and now they're selling their stakes all over the place because they need cash. So, but Deliveroo is doing well.
So German Deliveroo
just creates a bit of an overhang, a share overhang for
So you know what I mean? It's a German Deliveroo turning into German villain, really. So
they're completely different businesses. Sorry, they're in the same area, but Delivery Hero was the darling of this whole area because they were one of the largest players. I mean, I'm not talking about Uber. I'm talking largest independent players, but they've overextended themselves, and they're not in the group of, you know, Just Eat not doing as well, Delivery Hero not doing as well, Deliveroo doing very well actually.
Yeah.
But for those people who are interested in Deliveroo, I think this is an entry point because the stock's down strictly for technical reasons, not business reasons. They actually just upgraded their guidance for the year,
Okay.
or forecast for the year.
Yeah, I think Next is down because I'm sure I saw on Vox there, and Next has been downgraded by one of the brokers there. But there we are. I mean, Next, you know, it's done very well. NXT, and where is it by? I mean, look at that. It's the excellent rise from the COVID dash for cash. Oh, it's
Absolutely.
2022. That was for 43 quid up to 84 quid. Excellent run, I think. Get your comments, by the way. AI investors, thank God, 12 weeks of Jan are over. 12 weeks. Yeah, if you're on dry January, it may seem like 12 weeks. That's it. The thing is, if you don't drink, you know, it's you may live longer, but it also seems longer. It's like, you know, it's not much fun to be had. But I think, you know, going extreme. I think have a couple on a weekend is fine, as long as they're crazy. Super Mono says Bailey bounce. The man has no clue, because I did say the market is for Bailey bounce today, but yeah, well, I think it's a good sign. And in fact, you know, this is the thing there, Bailey bounce, and let's go to the front page of Vox, see what's moving and shaking here. Let's have a bit of an upgrade. This, like I said, to the website. You can now click here for fast links, RNSs and stuff. But B90 is a coverage here from Victor Holdings, pivots to B2B, targets profitability in full year 24. Vietnam Holding, how nimble stock picking has delivered best in class performance. Of course, that's in Vietnam, which Vietnam's a very a growing economy. So Vale Energy updates on South Sudan acquisition. I think there's we'll look at the results. There's Jerry Hall is CEO of Venture Life Group, and he has a chat with Paul today. Pets at Home, it's cut to hold. I noticed I got a notification on Pets at Home. This could be, you know, bigger companies tend to recover generally. And if you look at Pets at Home, it's just at a 52-week low. And to me, I mean, they did have a heck of a rally during COVID because you realize people were just getting pets, you know. They've rolled over. Look at this twice. They've rolled over. I don't know when I put that line there a while back, but you can see breaking down. And if you just put simple technical, you know, it just shows you the trend basically. I mean, look at that. It broke 200-day in 2023, and then gap down below it. First time that I've broken it here, touch it here, roll back up, broke down, and now 52-week low for Pets at Home. So one of the things I have put an alert on it, and see where it goes. You know, because you know, when you get big business, they can afford to turn things around and reshuffle, be more efficient. But who knows? It's worth a look. But they've been downgraded there on the front page, and you can see all that stuff there, broken out. Berenberg. Yeah. Oh, there we are. Barclays downgrades Next shares. There we are. Berenberg upgrades Marshalls to buy. Oh, I see. Okay, so some good notes on there now. Some on Vox. Helium One. Are you aware of Helium One? Have I mentioned this to you before?
I think you did last week. Yeah.
Well, Helium One did 1,000% in 4 days, and now people are following it like it's going to go up again. Which, if you're following Helium One, investing it, don't be silly. You missed it. It went from literally, I think, less than $1 million market cap to 50 million. And they literally had technical issues, you know, drilling for helium in Tanzania, I think it was. And they literally had several problems. And then you know, it looks like it was done and dusted. It wasn't going to happen. And then all of a sudden, they managed to drill it, and they got total depth. And literally, I don't know where the price is now, but it's one of those. It can only happen on AIM, pretty much. You know, look at where this come from. It IPO'd at like 5 pence or something, went up to 28 pence, and then came down to literally 0.00. I don't know what it was, but yeah, look at that. I have to scroll in because it's so small.
What
in the
is
chart
going on in that chart?
I know. So look, it went from 5 pence to 0.19 pence, pretty much. And it did a rise. It spiked up to 1,072%. but now it's back down. It's only done 520% now, but people are following it, thinking it's going to do that again. No, 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 no. That's what's called a near-death experience. It's the equivalent to, when you see the sort of programs on TV about medical dramas, and there's a guy in ICU, and literally he's flatlined. That's it. And they put the old jumps on him, try and jumpstart him, and he jumps and he takes a big breath. That's that. So it's coming back to life. Now he'll calm down a bit now. Now his heartbeat's working again. It'll calm down. But that's the way it is. But that's a nuts, isn't it? I mean, like I said, I do run a fancy stocks and shares competition. Someone did put I think it was £14,000 into that, close to the lows. And literally no, in fact, it wasn't close to the lows. They did have a good rise in that. I think it rose by, they got about 160 grand profit off it from the lows in my fancy, and they almost went from nowhere to number 2 position on the league. So well done for picking that. But I suppose you can do that in fancy stocks and shares. It's not much risk. Okay. Anything you've seen a note? Let me know, please, Vadim. I'll just go through.
No. So one to just have a second look, and I keep harping about easyJet, but it's on a tear. It just seems on a perpetual march forward, which I'm delighted. This is one that I was hoping would work out, and so far it's working out. So
nice.
It's totally broken through all the averages, recent averages, and the question is, it might, if you look at that zigzag historically, you're right. Now might be a good time to sell. But
in fact, look at that. I mean, that's a previous sort of resistance there was at 520, and it couldn't do it, and it failed. It came off. It's almost like a plane trying to get off the ground, and then let's take the lands back down. Then it came back up, broke 2 a day, and now it's above that 520. So it may have a little pullback, but they often say that previous resistance is support. So it may have a bounce back down here and come back. Nothing's ever sort of a hard line, so it may bounce around here. But that's a good move,
Yeah, it just feels like this one is coming out of the travel downturn from COVID stronger than the others, and the others are still wobbling. So, what was it? Wiz the other day had a bit of a warning about their Israel bookings and stuff like that. So they're a bit more exposed. Bad luck, no one can control for that. But the ultimate point is that some airlines are doing better than others. It's a difficult game to pick the right one, but definitely easyJet came out of this downturn pretty strong, and the numbers just keep coming through. And it just feels like they'll hopefully be one of the big winners coming out of this.
A question here saying, what happened to Destiny Pharma? I gotta say, my stops kicked in yesterday. I was taken out.
It's down 8%. What I just saw that.
Wasn't my fault though. I literally had a stop in it, I think 60 pence, and so all afternoon it was above that. All day it was above that, and it kicked in, took my stop out. So I was taken out of that. But they came out with, it's very odd, really. They came out with sort of I'll show you the read. My thought, I didn't really read much into it. I thought, what's the problem? It's not a big deal. So they mentioned this is a different part of, they've got the XF73 platform. There's different parts of that. There's nasal, there's dermal. This dermal is obviously it's newish side of the platform, but it's XF73 nasal is where they're going for the deal on, or maybe the whole platform, I don't know. But they give an update on the dermal side. They didn't mention anything about the upcoming deal or discussions on the deals happening here. I think that put people off first and foremost, because everything that comes out from Destiny Pharma now, people are expecting the deal on XF73, so that put them off. Then they went to M3, and they're talking about reviewing their chemistry.
Already, right? Is that
the
one? That's
the one. It's a deal. Yeah, it's a deal on that already. Yeah,
that's the one.
So, but they announced that they reviewed the chemistry manufacturing controls program from M3, and so they said they're going to go from, in doing so, supports the transition from a liquid to a solid dose formulation, which, based on market research, is the preferred formulation. So, because of this, it's going to take more time. They are obviously they're liable for this, the chemistry and manufacture controls. That cost falls on Destiny. But of course, if it needs to go to phase 2 again in a solid form, that falls upon Sabala, which is their partner there. But I'm thinking just that possible delay to revenue generation and no mention of the deal on XSNE, a bit of a sell-off. I took my stops out, but I think it just have to be a bit of patience, really. I mean, it may cost them a little bit more. I'm thinking with this, this chemistry and manufacturing control. I don't know how much it'll cost, but it seemed like, basically a delay, maybe a bit more cost, and no mention of the deal next to Zone 3
Yeah.
gave people reason to sell.
Yeah,
As you
that
see,
delay might be more significant, right? So if you go back to what they were saying about that, just
yeah,
if you quickly just go back, specifically on the phase two, so assessing the impact, if you see it there of these changes
yeah,
on the development plan, this may include a further phase two study. I mean, that's yes, it's fine that the partner might pay for it, but it's a
yeah.
whole other phase two program would be a bit of time, you know?
Yeah, and of course that was going to be the first revenue generated for them, pretty
Yeah,
much, and so that
yeah,
will push that out. So I'm assuming it's that, but like I said, I've had a good run. I was sort of 90% in that, so I've had a good run in that. But sometimes I think with biotechs now, when you get a good run, and you got to lock in the profit really.
yeah. Put your
Because
stops in.
yeah,
Yeah.
I can't just take a hit like that and just go back. In the past, I mean, I said there's a couple of companies I've been up on massively, and I've believed in the story and then end up taking a loss. So that's not going to happen again ever. I don't
Yeah,
care what the
yeah,
story is. If I'm sitting on a nice healthy profit, I'm taking a profit, full stop.
yeah,
And
yeah,
so I did there, and I'll await now, sit back, and because I still think there's long term potential there, but short term there's weakness, and I'm not so
well, we forget these tools that we have at our disposal, like
yeah.
putting stops in, which is brilliant because then the decision is made already and it's just taken on the day by the machine rather than by you.
It's worked out for me recently so well. It
Yeah,
really has, and sometimes people sometimes say, put a stop in your head, and you don't though, because
no,
you think,
no,
oh, it'll bounce back, and you end up sitting in the loss, and either the loss gets bigger or your profit gets smaller, whatever
yeah,
happens.
yeah,
And automating it just takes that decision out of your hands. And
yeah,
if you do it in the cold light of day, when the stock is rising, pretty much, it literally you're quite objective about it.
yeah,
But when the stock sell off, you become very subjective of the share price, and so so that's what's happened there. But
no, definitely.
anyway, someone else said something else about there. Any reason for the intelligent sound drop? I don't know.
Actually,
Helium One is
another one in that space, Cambridge Cognition. Remember that
oh
one?
yeah.
We used to chat about it a lot in the kind of during the COVID.
Yeah. In fact,
So
oh
I was a bit worried about this one. So this is one that I still hold. I
yeah.
sold a bit kind of in the heyday rallies. So to exactly do like you said, you take some of your gains
Mm.
while you have them off the table. So I sold about a third of my holding. I wish I sold a bit more, but hindsight is 2020. But managed to sell a third, which is great. But I was quite worried actually about the last statement said, oh, sales are slowing in the first half. This is the last interims, which was in September. And the next obvious kind of view of the second half would be a trading statement, which historically is like many companies who have a calendar year end, was in January. So that came out, and I was a bit of relief because the concern was, the company was still bullish about the second half. And, we've heard that before in our lives, and sometimes the second half doesn't materialize. It actually did. So the company actually delivered in the second half. They had a difficult first half. They came out of it strong in the second half, pretty much hit their forecasts. And it's doing okay, actually, the business. And, at this level, at this price, I think it's now interesting, Now,
Yes.
in
Do
a
you know what?
difficult
Thank you for that.
market, it has.
I think I've put an alert on these, but I've forgotten about Cambridge Cognition completely. Someone did say to me, a few months back, "Oh, Cambridge Cognition hit a 52-week low," and I said, "Well, that's not a reason to buy because
Yeah,
the
yeah,
momentum's against it.
yeah,
But it's worth putting in your watch list." So
yeah,
yeah, so the revenue growth 7% for the year,
yeah.
13.5 million, adjusted operating profit in H2 of 900,000, but for the year overall. So of course you take that from that's on top of the year. Okay. So they got cash though, haven't they? So all right, okay, it's interesting. Yeah,
Yeah,
okay.
I mean, they're okay. They had a debt facility put in just to be sure, to give them the headroom. That cash offsets the whole facility if they need to. So, what happened with this business is they made a couple of acquisitions,
Hmm.
and like all acquisitions, integration is there's risks
Key.
in integration. I don't think they had any issues with that, so that's all now behind them. They're fully integrated with the two acquisitions they made, but that's what they spent their cash on. The thing that I think caught everyone by surprise is the H1 revenues were a bit slow, and that's because the biotech market, so which are their customers, so they help them with their clinical trials. And if funding dries up in the biotech market, well, there's less clinical trials, and therefore there's less business for the Cambridge Cognitions of this world. But it wasn't as bad as it could have been, and that was my concern, right? So I'm just massively relieved by this announcement, because I think it's now they've gone through the difficult 6 months, and now the next 6 months are actually have panned out okay. Sorry, the second half has panned out okay, and the next 6 months they're pretty optimistic about. So they've gone through the crunch, basically. That's where you look at this and you say, is this a good price to be getting in at?
Yeah, well, let's have a look. I want to put is my 50-day. Yeah, no, impact. Yeah, interesting this chart here now. Yeah, I'll put a look on that.
It's found a level at this base at 50, around 50p.
In fact, have I got any? Let's have a look. Have I got any alerts on that? Oh, I have got a 50-day moving average alert, and okay, it's hitting that though. All right, no, I like that. I think if it gets, if you can break up here, maybe 56 level, above previous thing. There we are. Let's put an alert on that. Cambridge Cognition, everyone, put an alert on it. May be changing previous high. Yeah, and then I'll be alerted to that on my thing. Like that. Yes. Okay, good.
It's a good business. At its core, it's a good business. It's turning over about 13 million, roughly break even now, moving towards profitability, and 17 million on their order book.
Yeah,
so they have more than 50% of the next year's revenue they have half the revenue anticipated for the year covered, right?
Yeah. A contract order book end of 2023, 17.2 million, slightly down on last year, but with at least 8 million of current contracted order book expected to be recognized as revenue in 2024.
Yeah.
Good idea, Vadim, like that. Okay. So to the front page there, some of the rises here to Barron Oil up 87%. These are these minnows that literally get some good news out of some bad news. In fact, it's 67%. This is basically a farming agreement. I don't know much about Barron Oil. All I know is got a ticker boil. But look at the chart on this. You're seeing it's reminiscent of the old days on AIM. In the bear market, there's one happening. You're seeing these massive spike ups in these small stocks.
Yeah.
Almost showing a bit of liquidity. And all you need is like one or two, because these are trader stocks. Let's not make no bones about it. It's trader stocks. They're not, a business you're going to invest in for years. So you get a good turnover of cash from these other companies in AIM, and just a bit of liquidity within AIM will help it so much, So I applaud winners like this, a spike up, because I know the cash will come back into AIM looking for the next big winner, and it'll just help overall liquidity, which is very good. I mean, Helium One, I think, has done a lot for literally the markets, because so many people were in that, and it just spiked up and took their money out and put it somewhere else, which is quite good. Bushveld, I know it's one of John's favorites.
You are right about that. Liquidity is improving, and these stories that generate further liquidity, people recycle that money into the next potential big winner. And it's in small cap AIM that you see these spikes in single stocks. I have to say, we've been seeing like one after another stocks starting to get picked off which is good.
Well, there's another one here. It's an old favorite, Bushveld Minerals. John has covered this a couple of times. They've gone through troubles with financing. At the time, of course, there was a phenomenal winner back in the day, and people are still holding on to that latent hope almost. But they've refinanced some of the completion of convertible loan notes refinancing, and just because of this was dragging it a little bit. But BMN, and again, we see some of these winners, and it's come down from a long way. And if you look at look at that, I mean, if you look at the gain on this happened here, literally, it did 3,000%, from literally 2017 to 2018 in a year, 3,000%. And of course, it was massively followed. But look at that, that's so cruel that it's just gone all the way back down to 1 pence. And went up to 48 pence at one point. But who knows? Maybe this is a start refinancing. Commodities get better, stronger. We'll see going on. But Bushveld is a riser today. Power Metal, a couple of resource companies flying today. And they've been hammered. Strategic financing of 1.3 million. In fact, I talked about this yesterday. There was news up this yesterday with John. John covered it. So strategic finance through issue the market price. In fact, and it wasn't a discount. Literally, it's risen by 15%, but it's done at 1 pence. Which is a very good sign, considering in this market, resources have been, and they are an explorer, so they're not like they're generating cash or anything. So That's a good sign there. CEO steps down. Sarika, Tekcapital, Microsalt admission to its aim for this is
So that's one of their holdings. They
one of their holdings.
Tekcapital has multiple. They're kind of an incubator, right?
Yeah, exactly.
Yeah.
What I like to see today, what I like to see today is the CEO of Microsalt at the London Stock Exchange just throwing salt out to everyone. Be nice. Yay, having a salt over a Microsalt. That'd be great. Market cap of 18.5 million, apparently Microsalt. And it's I don't know if it works because it's basically about health, less salt. And it tastes the same apparently, but it's smaller. She's actually taking on less salt. But they
I've tried
hold.
it. I've
Have you
tried
tried
it.
it? What's it
Yeah, yeah.
like?
So
Any good?
it's
Salty.
basically yeah, it's salty, but it allows kind of you get the same salt effect with less salt. You see what I mean? So it's
Yeah,
healthy.
yeah.
The whole idea is for you to use less salt, and it's healthier.
Yeah. Helium One is more X-Files than Holby City. Yeah. Info Pets at Home is like a monopoly and a great business, but share price will go low because that's what good businesses do in the UK. And no, I did well in Pets at Home quite a few years back with a rally, but there's also a couple of. It's not actually a monopoly. There are other sort of what they need to do. Pets at Home is, of course, you've got customers coming in buying stuff and all that stuff. But what I quite like is CVC, I think, is a competitor that's done very well in that area. Subscriptions, recurring revenue. So they need to get up there. There's a VIP club there, the vet club, whatever it is, these clubs and loyalty schemes that have, a monthly subscription. And that there is very good for the business. And I think I haven't seen what they've said recently, but they're not. Boyle was no news. Okay, it's a placing rise. All right, they need cash. Oh, okay. All right. Is that be careful, everyone.
Oiled.
Someone's saying there Boyle is a placing rise. So there we are. Power flying at day, raising premium. Yeah, Edward, yeah, I've just covered markets there. So be careful. When you see something rising that fast, don't jump in. It's
No.
it's nuts. Venture Life. Are you aware of Venture Life?
Yeah, I used to act for them years ago. I haven't followed this latest trading statement. What is it? A trading statement? Yeah,
Yes, trading
let's have a look.
statement.
Let's have a look, actually. So
Yeah, it's,
full year revenue is 51.
yeah,
Up
60%. So
16%. That's good. I mean,
yeah,
that's good
pro
year.
forma. That's with acquisition, of course, but
Oh,
5-year
that's
percent year
why.
on
That's
year.
why. Sorry.
Yeah,
Yeah. No, it's 5% on the performance base. Okay, got it.
yeah.
Yeah.
But nevertheless, EBITDA margin increased by 2 points, highlighting gearing effect for increased volume EBITDA, cash conversion improvement. So they're going to do 51 million thing. Group net leverage, they did have a little bit of debt. They're bringing that down. Customer price increases implemented. So revenue lifts with 20% year on year. Strong second half. That's an outlook. We are moving forward. We're committed to continuing to intensify initiatives. But let's have a look there. Okay. So yeah, 50 million mark. Sorry, no, what's the market cap on this? Sorry. It is 46
Yeah.
million,
It's probably
50 million in revenues. If they're profitable, it seems quite good. But I mean, I think the chart is looking quite good in this. Have a check out the website,
I
Vox.
think I looked at them recently. Have they turned the corner? This is it. This is the
Yes.
corner turning moment that you want to see.
Yeah, yeah.
And their products are good. I actually I remember trying they have and it's probably their portfolio is much bigger than when I was involved with them years ago. But they have like these high-end mouthwashes and things like that, and toothpaste.
Yeah.
But it's a very particular kind of product on the boot shelves, and it stands out. It's not your typical. It's not your bog standard generic products, and they're good products. So I think that's probably the reason for their success. I don't know what the history is of this whole decline, but whatever.
I think a bit of debt. People worrying about the growth in there, but it seems to be now putting down the debt. And of course, debt. I just keep saying this, but I think debt is going to. If you can manage it and service it over time, it'll become less of a problem because, of course, we are going to see interest rates coming down. Refinancing won't be as bad as people worried. They worry about when interest rates are going up, thinking, "Oh God, people with debt is going to cost more." How expensive is debt going to get? But now we know there's a cap on it; it's going to come down. So if you can't finance it, but you can see there a couple of times came down. That blue line is 50-day moving average. Oh look, COG. That was on 50-day moving average. Came down there and it broke 50-day moving average there. It didn't break sort of previous highs here, which they hit there and came down, broke 50-day, massive rise one day of 9%. I say massive, and then back to this resistance. And now it's above that, quite like, and we've got what's going to happen here is that 50 days going to cross the 200-day, which is called the Golden Cross. And last time that happened, it's quite a bullish thing. So it's looking good in the chart there, VLG. strong day today on that trading update, up 14%.
Yeah,
That's a good sign.
that looks
Yeah,
like a
pretty,
proper recovery in place now.
yeah, absolutely. Yeah, and it's come down from a long way. Look at that. So
Yeah.
a quid a share at 39 pence. That's Venture Life. Like I said, if you want more information on that, check out the interview up there with Paul Hill on the front page. This is an interesting company. I don't Tertre Rouge. John Human, who's works at Vox, ex Investors Chronicle editor, joins me on Tuesday and Friday. Was chatting about this, and this is where you can invest in classic cars. Now, if you look at who's behind this, it's like Mika Hakkinen, David Coulthard, all ex Formula One, and
Oh, they're
quite a
all
good
behind it. I mean,
yeah,
that's
few shrewd businessmen. They're investing in really rare classic cars like 1970 Ferrari. That is one of them there, and some of that. Yeah, and literally, it's quite an interesting little company. So John's done a question and answer there with them on video, but it's worth looking at because it's just very, very interesting. It's
so what are
TRA, the
they, just a
ticker.
fund that holds these
Yeah,
cars, sells
basic
them?
investment company. Yeah, well, I
Yeah.
mean, if these obviously, I assume if the price of these cars go up massively, they'll sell
Yeah.
one off probably and realize some profit.
Yeah.
But yeah, they are essentially in search for really one-offs,
Mhm.
cars. I think the last one they bought there, acquisition and fundraise. The last one they bought there was a 1972 Lamborghini Miura PS4 for 3.25 million. So it literally, I mean, if you dreamed, I think this could do very well because there are so many motor petrol heads out there and car
Yeah.
enthusiasts that can't afford these cars. Most people can't afford these cars, but you can sort of own a share of it. So it's a very interesting little company. I do like them.
Yeah.
How much they
Yeah.
raise? So consequently, they now have purchase agreements in place for on all six cars with an aggregate value of 32 million. Wow. So yeah, so they raised one. I don't know how that works, how they're buying them. I have to look into that. But I just think it's a very interesting little company there.
Well,
They
that's a
haven't lost.
fun business.
Yeah, it is, isn't
You
it?
know, no.
It's almost like yeah, exactly. And I assume if what they need to do, this would they're probably doing this anyway. I haven't looked at the thing, but if you invest in this company, you become a shareholder. Then you do the AGM at the sort of area where those cars are, so you can actually go and look at them, touch them, feel them, and that and literally sit in them. Maybe I don't feel like I was sitting in them, but that would really be a bonus for shareholders, because you won't get
Yeah.
close to these cars generally. They
Yeah.
are in museums and stuff, but that would be quite nice. Anyway, Made Tech Group. This is it's sort of digitizing, government organizations. Good turnover, top line, but the costs have been going, and also delays have been going. I've said recently, if you are in a business that invests or relies on government contracts,
Yeah.
it's maybe a tricky time because the government are trying to cut back in all departments or delaying contracts because they haven't got money because literally, it's very tight. But they announced a trading update day. So they are a 15 million market cap. But I mean, it's half year, right? So 19 million group revenue, but it's down a little bit. I didn't think it was I don't know if I'm missing something, but I didn't think it was bad because it's been hammered anyway. So
Mm.
19 million market cap. So you're assuming it was 40 million roundabout for the year. They're only 50 million market cap. EBITDA of 1.4. So it is
I mean, it's
yeah,
still up on the year.
yeah.
Was there an acquisition again? Is there something else
Well,
going
the
on?
margins got better.
Yeah.
I mean, you have to look at the decent amount of cash, like
Yeah.
7.9 million now. So okay, so if they're
So,
only losing,
so
if
did they
they
massively miss expectations? Are they overvalued? Is that what?
well, if they're going to lose 3 million for the year, that's going to go down. I mean, they have lost from H1 last year. I think it's 1.1. So sales bookings 12 million down. Look at that. That's what it is. Look at
Oh,
that.
there we go. There we go.
Sales bookings down literally at 2/3.
Yeah.
Um, yeah, but saying their contracted backlog, I have no
Yeah.
idea what that is. But yeah, so they've got some big contracts to governments, but it's taken a bit of a hammering today, and
Mm.
I wouldn't mind seeing you know broker forecasts saying where they'll be profitability. Is that enough cash to get the profitability? But it is literally it gapped down today, you know, almost to an all-time low there at 9 pence. But
What's the
it's
market cap now on that?
It's
On
looking like 15 million, I think. Check
okay,
that
so
out.
it's on
Sometimes,
one-time sales.
sometimes they take take
Yeah.
a
Yeah.
while to update the shares in issue. But
Yeah. Yeah.
the,
Yeah.
the guy, what I quite like is the guy here, Rory, the guy who's the CEO, does own a nice chunk of stock. He's one of the founders, and I do
Yeah.
like founder businesses. Let's look here. No, that's Chris Blackburn. But I know he's been buying some direct to share purchase. So there's Rory. There we are. The 17% of the company. He now owns 28% of the company. So he bought the 17 pence there. It's now 10 pence. So he bought 900,000 shares there. So he owns a decent chunk of shares. So yeah. But one worth looking at, like I said, at the moment, anything in that area where there's government contracts. There's a lot of delays there. They're pulling back on contracts. Another one like that is Eneracua, it's a company has energy, water, and all that stuff. They come listed a few years back and was looking very good, had a raft of government contracts, but they're all being delayed. And it's like, oh my word! So they've had to revise down and down and down.
Yeah.
Now it's just it's hard work. It's the biggest rise fall of the day. CapEx.
That one's quite volatile, CapEx over the
Yeah, well, they were really highly rated a while back. They're supercapacitors. And
Yeah.
in fact, they've had a bit of a litigation issue with a company now owned by Tesla, who bought this other company in America, and they've been ruled against them, so they haven't impinged their patents.
Okay.
But you don't want to go against Tesla really on an infringement problem in America. But revenue $2.3, increase of 40%. But they said they got
There we go.
EBITDA loss.
Thousand. What is that? Australian or is that
Yeah, that was
thousand?
an Australian, yeah.
Okay, yeah.
Just EBITDA, million.
Oh, million.
So
Sorry. Yeah,
and
yeah,
they
yeah.
got cash of 300 grand, no debt.
Yeah.
So unless they've raised cash recently, they're gonna need cash.
Yeah, that's the
Yeah,
problem.
yeah. So that's it. What else is the fall there? And that's the trouble, see, you can't be too slow on raising cash. When your share price rises, you've got to raise it if you're loss making, because once you get into the area where you're releasing results and people see you're burning $1 million a year or whatever for half year, and you got 300 grand in cash, it's like you're out of cash. I
Goodness.
know. This is interesting. Grid, Gresham House Energy Storage Fund. It's a fund. Ticker is Grid. And they are the UK's largest fund investing in utility-scale battery energy storage systems.
Hmm.
And they say the company continues to be impacted by weaker revenue environment due to a combination of the battery energy storage still being significantly underutilized in National Grid's ESO. And the ESO is the balancing mechanism. So they're still sort of when they call for energy, they're going to gas first,
Yeah.
not battery. They're saying, and I don't know why that's happening. So they've had to sort of cut back. I mean, the capex is going to go down. I think they've cut their dividend policy. It's still going to do a share buyback, but they've got a debt facility. They're chatting with that. So yeah, little issues there on that. So they'd say going forward that they do still see upside here. But look at that. Oh my word!
God. Oh, that's painful.
Yeah, it's gone from 170. In fact, I put an alert there. 170 down to 40 pence.
Yeah.
So yeah, and that's a steep drop. Look at that, in the last few days.
Just very bad.
It's halved in literally since the start of the year. Halved. So a little worrying, but maybe with a look going forward. Anyway, let's just have a quick any more comments there. Let's look. Looks like wait. All right, here we go. I think Venture Life had a supply chain problem and changed their Chinese supplier just from memory. That's Riffisoft saying that. Or maybe it was Venture Life sales in China. Anyway, I'm fairly sure that it's a China problem. Yeah, whatever it is, it's a problem with China somewhere. Yeah.
Speaking of China, actually, what do you think? Do you think it's going to be a perpetual bull with this real estate crisis? I mean, it certainly feels that way. It's just gone.
It's hard to say where it's playing out, isn't it? But in fact, someone just said, well done, highlighting this. Someone did say, go to MTEC again, and they did say at the end, the board anticipates that the procurement market will be impacted by the uncertainty created in the upcoming general election in the short term. Oh, there we are. So there are obviously government contracts. Notwithstanding this temporary market backdrop, the strong improvements made to MTEC's operating model and margins and its commercial offering combined with balance sheet as well. So they're saying uncertainty in the markets due to the election. There we are. So maybe that's an opportunity somewhere when that clears up the uncertainty of the election. Okay, it's very interesting. Yeah, no, I don't know. I think China now is they're gonna boost, aren't they? They're gonna plow some money into the markets. Aren't they going to do that?
I don't know. I mean, it just feels like the bottom's falling out. You know, Hang Seng has collapsed. It's struggling to recover. We saw that wind down of Evergrande, right?
Mm.
And I just don't see. I can't see how an economy of 25% of GDP being exposed to real estate comes out easily out of a busted real estate market. I cannot see it. I just don't
Yeah.
see how it's going to recover easily.
No, but they have a different kind of system. I don't know how it works. Literally, they pull. There are many levers they can pull, and it's very opaque. I don't understand how it works really. So it's a capitalist economy unless they say so, and
Yeah,
they
yeah,
do other
I
things
guess.
then.
I guess.
So anyway, a couple of bits of news here. Manufacturing in the UK still bad, still in a recession. Manufacturing. Look at this. British manufacturing started 2024 on a weak footing, recording 18 consecutive months of contraction. 18. God, that's a recession, isn't it? Luckily, we are a service economy, so 80% of the economy is service led. So but it did go up a bit. It rose to 47 in January from 46.2.
Still contraction. Still.
Yeah, 2 month high, but below an earlier preliminary reading. So they were expecting 47.3. It's a little bit anyway, which had been Shell dips profits. They've only done 28 billion. Here we are. There we are. But they are going to say they confirmed, by the way, Shell. They paid 106 million in the UK windfall tax for 2022. Meanwhile, they are returning 23 billion to shareholders in 2023 by dividend. So look at the difference in that. 106 million, they're returning 23 billion to shareholders. There we are. Do you know what? I laugh at it. Jeremy Hunt, right? So I heard him today. He said there's less scope for tax cuts in the budget. He's been saying forever we're going to cut taxes, right? Since the
Yeah,
last budget. And then
yeah,
all of a sudden, IMF came out yesterday and said, don't. They warned against future tax cuts, saying you need to spend. You haven't got enough money for
Well,
while
actually, I mean
address
that
it.
absolutely. The people are advocating a Keynesian approach here in the UK, and just spend, get into debt, and spend our way out of this to drive the economy. I don't know. Maybe it's not the wrong idea. It's always hard when we're roughly at 100% debt to GDP already. There are countries that are much worse, like Italy and Japan. Japan's proceeded with spending, so it might be the path to follow. I don't think it's necessarily a bad idea. Um,
Yeah,
so
I
that
think I think
that would
I think
mean running further deficits and getting, taking risks. I
yeah.
don't know where I sit on that, but it's certainly, being proposed right now. So
What I'm
to this
worried, what,
point, that tax cuts, maybe are the right way forward, or spend more.
Yeah, what I'm worried about though is like, do you remember when Labour were in power years ago, and literally they opened the floodgates in the last
Yeah.
budget because they knew they were going to lose, and they tried to do everything to win, and then all of a sudden they left a note on the table said there's no money left for the
Mhm.
next exchequer. I mean, they were in danger of doing that. I think they want to really win votes. This is more about politics here, and it always is anyway.
Yeah.
But rather than thinking long term for the economy, regardless of which party's in. They shouldn't just go for it because they try to win votes. They should put the British people first and foremost and thinking what will help the economy mid to long term rather than what will win votes in the short term. That's the worry.
I totally agree with you about the politics, and that's what's driving the all parties. But there is, there's a school of thought, the Keynesian school of thought, which is
Yeah,
spend your way out of problems.
yeah,
And
yeah, yeah,
it's just coming back right now in kind of economic circles in saying that that's one approach that might serve the UK right now in this current. I mean, Bidenomics is that essentially. Bidenomics is effectively Keynesian economics. It's just saying, I have to say, I find it nauseating to see whatever the debt level is in the US, it's pushing 20 something trillion, right? It's
yeah,
it's terrifying. It's a terrifying amount of debt.
yeah.
But it is a strategy. It's a government strategy, irrespective of what party you support or
Mm.
where you sit on the spectrum of right to left. It still is a strategy that has. I mean, it dates from the Great Depression, right?
Yeah,
So,
yeah, exactly. Well, they realize now that basically, after the great financial crash, austerity wasn't the way forward. It's not. It's
well,
you
that's it
can't
exactly. Here's a good
make people.
example.
Yeah, yeah,
You've got a perfect, more recent example as opposed to a 1930s example with the
yeah.
Great Depression. But more recent example is exactly that austerity in a time of when maybe we should have been doing the opposite is doubling down on spending. But
Yeah, well, exactly. But the thing is, if you want more tax take, you've got to create more, stimulate the economy. Essentially, you're not going to get more tax take by, suppressing the economy. So, when you think about it, government should be stimulate. I suppose there are clever ways of doing this, though, and I think making it, a more attractive investment place for outside investment would be quite clever. But anyway, Labour, do you know what I quite like? Labour are really doubling down on Conservatives' pain. They're holding, I don't know if you saw today, they're holding a massive meeting day, conference with all the FTSE 100 leaders, and they're saying things now that they won't cap bankers' bonuses, which I think is very sensible, because if you want the best talent in the world to run your financial system, which is very influential in this country, you've got to, you can't say, oh, well, you've got to come in for a cheap wage compared to everywhere else. They'll just go abroad. They go to New York, they go to Paris, they go anywhere else. So if you want the best guys, in the financial sector, you need to pay top dollar for them. But also, they're also saying now they're not going to tax, the cap tax, corporation tax at 25%, and they are. They've known they've had a problem with business for a long time, Labour, because it's been a left-leaning party for a long time. But now they're courting the centre and centre-right, and I think they're doing very well here. And they're saying they will be the party of business, and they know they've been weak in that area. So I think that if they continue in this vein, it's just saying, don't be worried, business. We are pro-business. If they say that, they're going to win a lot of votes. They really are, because I think people want to change. But they're playing the game, a clever game here.
Yeah.
But anyway.
And I actually believe that that's the case. I mean, nobody wants to kill the economy, Labour or Conservative.
Yeah.
It's just, so I believe they'll actually deliver on that when they come. But I'm not playing politics. I don't have any allegiances to either party. I'm just saying, I think it's justified because I think it's actually what's going to happen.
Yeah. No, I would literally vote for. It's like with the companies I own. If you're making me money, I'll stay with you. If you can make the economy work and you can improve the economy for everyone, I'm with you. That's it. Because everything comes from the economy. If you start earning money, create more jobs, more people feel the wealth effect, everything. So don't get in the way of business. Facilitate and help business, and that's the way it should be. And when you start just overtaxing or putting regulations in, it's hard enough anyway running businesses. So if you can encourage business and stimulate business some way, you've got my vote. Pretty much, that's it.
But it is going to be an interesting year ahead because of these two elections that are coming. So those are the storms I find building on the horizon end of 2024. Particularly the U.S. election. We'll see where that goes. We'll surely be talking about that again.
Yeah, marvelous stuff. Vadim, thank you very much for that. And let's quick look at any change on the markets here. So anything happening? No, in fact, FTSE's come off a bit, but no. Let's look quickly. Nothing's really moved. What was FTSE up? It was 0.5%, wasn't it? But now it's come down a little bit. And
but it's doing okay compared to yesterday's close in the US, which was terrible. I mean, the US got hit hard yesterday.
Yeah, we did mention that the Fed. Basically sold off because he just said March rate cuts aren't on the cards.
Aren't on the cards, exactly. Yeah.
I keep saying big deal. So why is everyone trying to get? That's the trouble with Americans. They're too short term. They're trying to guess. Well, the markets have been amazing, but the Americans, the markets, just trying to guess it's going to be March. Well, so what? Doesn't matter. Maybe April or May doesn't matter. It's going to happen. Think longer term. There we are. Thank you, everyone. Don't forget hit that thumbs up button if you could. Subscribe to the channel and download the Vox Markets app because it's free of charge, but it's worth an absolute shed load to you. Thanks, Vadim. Speaking next week.
Thanks, Justin.